The thinking here, because you placed the ratings of China on review about 14 months ago. What happened during this 14-month window? What was there a catalyst that triggered the cut?
So we changed the outlook to negative 14 months ago on a AA3 rating, and today we have downgraded the rating to A1 and changed the outlook to stable. And so two parts to that decision. One, the downgrade is premised on what we think is really weighing on China's credit metrics over the medium term, from a combination of slower potential growth, of policy targets, growth targets that are still higher than that potential, and so the economy is dependent on policy stimulus, and with that comes higher leverage in the economy, in the corporate sector in particular, in state-owned enterprises, the public sector in general. And that leads us to think that combination of slower growth and higher debt poses some contingent liability risk for the government.
Right. So I'm looking at the statement now, and essentially what you're saying is because of how the economy is structured and because of the incentives, of course, to still target growth, the natural progression, at least for the next few years, is that the buildup in leverage will just naturally outpace the growth, the nominal growth over in China. In other words, there's nothing nobody can do at this point, but this is just a reality.
So it is likely to be a very medium-term and gradual erosion of credit metrics, and we are looking at the policies that the government is implementing. The authorities have recognized the risks that come with high leverage and have a very broad agenda of structural reforms, and we take that into account to the point that we think that leverage will increase more slowly than it has in the past, but still that these measures will not be enough to really reverse the increase in leverage.
Right. I just want to visualize a story. And we have total debt to GDP. I have a chart right here so our viewers can see that. Let's put it at 260% of GDP. So if this continues to rise, is there a point at which this starts to plateau? I mean, are we talking, what, a 10-year window before these reforms that we keep talking about here every day start to kick in and hopefully this becomes more sustainable?
So what is relevant here, so this 260% of GDP is made up of household debt, around 40%, of government debt also moving towards 40%, and then corporate debt is really the big part. And what is really pertinent to the sovereign rating is not only the level of that leverage, it's the trend in the leverage, and it's also the capacity of the institutions, of the corporates, of the households to service that debt. And so with the downgrade to A1, what we have concluded is that that capacity is slowly eroding because growth is slowing. As at the same time as leverage is rising, then really the revenue base to service the debt is growing more slowly.
All right, the timing is an issue for China, no doubt. Currently, the sovereign debt is mostly held by domestic investors, but China's opening up the bond market to foreign investors, hopefully getting foreigners to pick up some of that load. So with Moody's downgrade here, it really kind of puts a hit on China's bond plans.
So there are two aspects, I think, to China's medium-term objective, which is to open its capital account. In the short term, we think that the capital account is likely to remain largely closed. There are measures being taken to open the capital accounts towards inflows, but in particular, as far as outflows are concerned, then increased scrutiny is likely to stay. And that is really an important element in our assessment because we think that through that stability can be maintained in the short term, and that really is one element that we're looking at that really supports that stable outlook that we have on the A1 rating. Medium term, if the capital account were to open significantly, then that could come with higher risk. It could come also with some benefits in terms of better pricing of risk of that new debt, of new investment in the Chinese economy. So that's definitely something that we will keep looking at that is very relevant to the sovereign rating.